Hello, everyone. Good day. It's been a while since I did a video like this, but I was having a conversation with a friend of mine, and I noticed I had not checked the economic calendar for a while. Um, there is no need to go over the basics of how macroeconomic indicators, how those indicators, macroeconomic indicators, what's the brother again? Trying to remember geopolitical indicators and all of that. It is no news how they affect the capital markets, equity markets, whatever you choose to call it, the financial markets, right? And I was going to check because we are anticipating a rate cut, right? The Federal Reserve, that's the like apex bank for the United States. We are suspecting that the I don't know why it's difficult for me to remember my terms. Like I said, it's been long I did this. So they've been contracting there. They've been on a hawkish yes, they've been on a hawkish monetary policy for a while. So they've been the word is quantitative tightening. Yes. My dictionary is coming back to my head little by little. So quantitative tightening, and one of the tools that is used for quantitative tightening is having a hawkish stance on interest rates, essentially increasing interest rates. Why? Because they are trying to manage inflation, like reduce inflation, and really just help the economy from not going haywire, right? And so there is almost a correlation between interest rates and how the markets react. But for this study, I want to check how BTC USD has always how it has always responded to, because I've not done this study like this before, right? So we're going to check from when BTC had reasonable price action. So like the first serious bull run was in 2016, 17, right? And before, I used to think that, oh, when the rates are high, that, essentially when quantitative tightening is ongoing, when they are the apex bank is carrying out a contractionary carrying out contractionary policies, right, through interest rate hike. I'm trying to remember the other ones, but I can't remember. They are trying to essentially mop up excess money that is in the system, right? Because they are trying to fight or curb or reduce the influence of inflation on the economy. So the textbook idea is, oh, when interest rates are being hiked, that it is more expensive to get money from the banks, right? So it means businesses will not want to take loans that they can, put back in their business and grow, right? So there's a form of like contraction on the growth of businesses, which then influences the equity market of those businesses, right? Like the stocks and all of that. So the textbook idea is when rates are being hiked, the market is supposed to contract. So you're supposed to see, because now things are not in quotes booming compared to before. So you tend to see price of these equities of stock crash, right? Whether crypto is an asset class or not, the debate is still going on. But crypto tends to mimic the at least yeah the stock market. It tends to mimic the stock market, right? Not very correlated, but it tends to mimic. So the idea is when rates are being hiked, we should see prices drop in quotes. And then when rates are reduced, so like when rates are being cut, essentially money is cheaper for businesses to take money from the bank. Yeah, you're going to get money at lower interest. So I mean, who doesn't want that? So you see, more funds are now pumped back into the system, and then creating in quote new jobs, or essentially improving the income situation of the particular demograph, where these things are being done, right? And so excess money, people have enough to save and then to invest. And that excess cash that goes through investing finds their way into the equities market, right? Finds their way into speculation, finds their way into crypto, finds their way into Bitcoin, essentially. And so you now have rallies, right? Because now everybody is like, what is the next? So you see excess money trying to chase just anything that is there. It pushes essentially Bitcoin experiences that inflation in quotes, right? But that's the kind of inflation we're looking forward to, right? When the prices of your assets go up. You don't want the prices of your costs to go up, your living expenses to go up. Because at the end of the day, it's actually inflation. So inflation of living costs or inflation of your assets, inflation of your liabilities, inflation of your assets, right? And that's the beautiful thing about life, the cycle. So enough of the economics and philosophy and geography geopolitics talk. Let's get into the chat. So we can see here that please, because of I'm recording this with my phone, just follow this cursor, this I call it cross sectional line or something, the dotted line, and then where two of them meet, where the vertical and horizontal line meets, is where I'm trying to like focus per time, right? So I'm starting from here. You see, in November of 2015. Okay, I mean, coming from the eurozone crisis of like early 2010s, and which which came after the global financial crisis of 07, 08, 09, and all of that. Rates was sort of, flat for a very long time. I think it was at 0.25% for a while. 2012, 2013, it was just flat. It was very flat, right? And then in November of 2015 in December of 2015, I think that is when another 0.25% it was increased. So you can see this from here, it went up to, it now became 0.5 percent, which is actually very low, but yeah. And it was around that same period that we can see, I don't know my chart. Okay, this is better. It's around that same period that we can see Bitcoin market had this sort of correction here, right? And then when the rates went up, and was flat for a while. The price of Bitcoin started going up from like $300 to about 1,002. And as price kept, gradually in 2016, the interest rate was hiked to like 1% to like, this red line, sorry, the red line shows you the interest rates movement, right? And then the candlesticks show you Bitcoin's price action. So we can see that, contrary to what at least we read in the textbook, just because of rates are being increased, it doesn't mean that prices will contract. Because at the end of the day, rates are not the only thing you have to consider. There are other, I forgot what they are called now. Leading economic LEIs, leading economic indicators, right? That you have to check. So the bull run of 2017, you can see that throughout the bull run. In fact, let's see where it started. So interest rate was at, as of November 2015, interest rate was at 0.25%. And as when the market stopped in December of 2017, the interest rate had increased to 1.5%. That's like multiple times. That's like almost, is it 7x from 0.25 to 1.5? Multiple, over 5x. So we can see that although there were periods when interest it was flat, they will hike, they will wait for a while, maintain then hike, maintain then hike. Then so it means in this 2017, there are other I'm trying to remember, is it Mount Gox? One exchange, the other one of the pioneer Bitcoin exchange platforms that maybe they had a hack or something then. So right apart from rates, there are many other a million other things that can influence the market. Oh, this video is already too long. I need to keep it under 20 minutes. So I'll hasten up from here. Yeah, so rates kept increasing, and as the rates were increasing, we were experiencing a bull run. And then the correction of 2018, right? We saw that rates kept increasing while price corrected up until price bottomed here. Now, here's the interesting thing. During the point where price bottomed, I need to see during this point here where price bottomed in 2019. ending of 2018, beginning of 2019, we can see that immediately the rates got flat. Price activity started like was trading within a range, right? And then even started going green for a while. Then immediately it was, this is June of 2019. The rate was, if you check up here, you will see up here, my top left, you will see the figure in pink, the Federal Reserve rate in pink. So until, in fact, this side is interesting because, I mean, many times, except you are a trader, Sha, but this 2018 price action, again, this is the monthly chart. So every candlestick you see represents 1 month price action. Except you are a trader, but this kind of price action can just be somehow, right? You don't know, is it going up, is it going down? Market is just trading within a very uncomfortable range. So yeah, so what happened? So in April of 20, so okay, in December 18, we experienced like a rate, and this will give us context for what I'm about to show us now that is happening currently. In December of 2018, the rate hike plateaued. They stopped hiking the rates. So they just maintained at 2.5 or 200 and, I don't care if it's 250 basis point. I can't remember. But 2.5%, that's our normal English we're used to. In December 2018, up until June 2019. So for like, that's like 7 months, the rates were just maintained. They didn't reduce or increase it. And then in July, the following month, it's dropped. They started easing, quantitative easing, right? They became dovish. The Apex Bank in the US became dovish. It's called, what's the word now? Quantitative easing, right? The US started to, in quotes, increase their balance sheet. There's one other word I'm trying to remember, but that's besides the point. So we can see here now that, and this is the important thing I want to show us, even though the rates were now being cut from July 2019 up until, I mean, my favorite month, because I think this was when I came into the whole financial markets thing in March. In March, yeah, was it in February or March of 2020? I think it was in March of 2020. Thanks to the pandemic then, and all of the things that were happening, I was distracted from school and decided to look at other things that were happening in real life, right? Ah, good old days, in quotes, good old days. So we can see that 2019, June 2019, Bitcoin for that month closed at 10K, or let's call it 11K, 10,700 plus. And then immediately they started cutting rates. Bitcoin was this was a bear market, although it was very rangy, like, but it was a bear market. Up until, I mean, for me, this was like the greatest month in price action, at least in my own lifetime, because things were crashing, things were dropping, barrel of oil selling for less than $0, like negative, a lot of, I remember back then, funny stories really, right? And then what happened? That same period of great fear was also the biggest opportunity for to to in quote take risk and succeed. Referencing what's his name, Speed Daddington, right? Because why many people were selling out of uncertainty. I mean, uncertainty was high. We are going to experience life in a new way. The pandemic, the lockdowns. There was a lot of panic then in the market. So while it was making people very fearful, some other OGs that understood how the market um, works, they got into the price here, right? And so we can see that in March of 2020, after Bitcoin had dropped his like largest drop in a while and bottomed too in that same month of March 2020, and I think that was because, so in February, the previous month, in February 20, and I mean, so now this is a cause and effect thing. So now it is not because of the rate cuts that Bitcoin's price dropped in quote, but because of the macroeconomic condition of the world then that led to the rate being cut, and then Bitcoin's price now crashing with it too, right? So it goes back to say how indicators are just indicators. You need to put them side by side with a lot of other things too, anticipate or understand, oh, this is what is happening, right? So in February of 2020, the rates were at 1.75%. And then after it took that very huge cut from 1.75% to 0.25%, you can see how the price just dropped. And then I think if you go to the weekly chart or so, you will find a very good demand area here where the guys that bought Bitcoin at essentially 4K here saw the reasons why to buy it, and then Bitcoin started its journey to the craziest bull run that made all of us money and also lost. I mean, I don't want to reveal some things, but 2020, 2021, they're the best and worst years of my life, especially 2021 because I saw Shege, but that's by the way, sure. And so, more importantly, we can see how from April of 2020, the rates were kept flat. The rates were maintained at 0.25 up until 20 up until February 2022. Now let's look at Bitcoin to see how price responded to that. So March 2020, from February 2020 to March 2020, the rates were cut from like very huge cut from 1.75 to 0.25. I mean, that was the period of when the US government was giving their citizens this how is it called? Is this stipends? I mean, they were essentially giving their citizens free money. I don't know if you guys remember from 2020, benefit boys in quote, right? The US were giving their citizens benefit packages, and then we had, it's not something that we're not very proud of, but yeah, we had internet fraudsters and all of that posing as decent benefits boys to also get some dollars for themselves, right? And so I think that was the reason behind that that thing that trended that then in 2020 benefit boys. So back to the chart. So we see that the rates were flat and then rose up until a high of like 65K in April of 2021. I think it was in this April of 2021 that if we had known then, we would have just respected ourselves. But then we were new to the whole thing. Here's the interesting thing. The rate was still the same, but after price touched like 65K in April of 2021, I will never forget May of 2021. That was a very significant month in my financial markets career, in quotes, right? The rate was still the same, but the price dropped. And then the rate was still the same in June 2021. It dropped to the bottom. And then we had this last push up. Notice how this pink line is still flat up until when we now created a new all-time high of around them, was it 69K, right? Notice that the rates were still the same. They didn't change. However, I remember in November 2021, I think towards that Q4 of 2021, that was when we started hearing like the US government started making talks about how they were going to start increasing um, their rates, right? Like how inflation, I still remember, I think it was still in that period. Now, I don't know if it's 2021 or 2022 where the inflation rose to as high as 9.1%. I can't remember. But yeah, things were essentially like we had recovered from the COVID 19 pandemic, right? And so for things to get back to normal, they had to, start cutting out all those excess money they had already printed and poured into the economy towards the end of 2019 and throughout all of 2020. And so we can see that price again, one thing technical analysts or price action analysts believe is that the candlesticks or the charts always price in fundamentals. So in line with that, even before they now started increasing the rates in March of 2022, you see, before even that first hike from February 2022 of 0.25% to March 2022 of 0.5%, we had already talked in November the previous year, 2021, we had already started dropping, right? And then before we now increased in April 2022 up until July 2022, we went from 0.5 to as high as 2.5. 0.5 to that's 5x now, 5x increase, right? Now here's the beautiful thing. Here's the beautiful thing. So this bear market that made a lot of people cancel crypto and all of that, that is the 2021, 2020, ending of 2021 throughout all of 2022 bear market. Rates were still increased. However, when the market bottomed in the ending of 2022, that's 2 years ago, rates were still, in fact, rates was even very high as 4.5%, right? And then rates were still being increased from 4.5%, 4.75, 5%. maintained for a while. What am I trying to show you? Throughout all of 2023, let's check from the beginning of 2023, that is last year, January, rate was at 4.5%. And then up until ending of last year, which is December, rate had increased to 5.5. In fact, rate had increased to that 5.5 mid of last year, July. And then they maintained that 5.5 since July. Now, see what happened. After they maintained it, we had this, crazy recovery. In fact, I even led to a new all-time high of about 70, let's call it 74K, right? And so since July of last year, the rates have been maintained. Now, here is the thing. If you look at the pink line, that is the line that is showing us the reserve ratio and all of that, you notice that it's like crypto too, or it's like your price cycle. There is going to be the markup, the there's going to be the markup, there's going to be your, I forgot what it's called now. Why has my Wyckoff theory left my head? But there's going to be the markup essentially. That is when price rallies rise, there'll be the top, and then there'll be the markdown, or when price crashes, and then there's going to be the consolidation. So there's going to be the markup. You're going to have your distribution. Yeah, that's what it's called, and then you have your markdown, and you have your accumulation, right? So essentially, we can speculate that the interest rate is currently distributed in quote, like it has gotten to its top. So what is going to happen next? We're expecting a cut. And if you check these interest rates, okay, because of I'm comparing with Bitcoin, I would have shown you how interest rates haven't the last time interest rates were this high was like over almost 30 years ago, right? And there's this theory I have. If you check the dot-com bubble of late 90s, early 2000s, if you check the global financial crisis, at least those two, in fact, even if you compare with the most previous one we have, that's 2008 global financial crisis, you notice that all those crises coincided with when interest rates were essentially high. So then again, cause and effect, or correlation, causation. So just because of two things are correlated doesn't mean that one is causing the other, something around that, right? So, but then again, the realistic thing to anticipate is a drop from here for the US to start cutting their rates, right? That's what we are to expect. For how Bitcoin is going to respond to that, to be honest, I really do not know. But yeah, when I look at these charts, if you use retail price action, at least when you come to the higher time frame, you agree with me that this is a bear flag. Sorry, this is a bull flag. Essentially, what we're trying to say is, even though we are experiencing a a mid-term bear bearish move, right? There are chances that we'll have something like this, like Bitcoin will just, I don't know where it wants to come and bottom, but it will come and bottom somewhere here, and then who knows, aim for this same. Again, recency bias is just affecting me here because I'm looking to how price moved here to determine what happens here. So maybe either move here and then drop, or just keeps going up for a while before it drops again, right? That is one theory that I have. Again, nobody really knows how this market can move in the short to mid term. So my speculation is that when the rates are cut, like we experienced in 2019. Remember what I said in the earlier part of the video? In 2019, where the rates were cut and then we had experienced this bearish move here. So who knows? Maybe a similar thing happens. So maybe, and if you can check, yeah. Okay, let me just leave that out of the video. So yeah, maybe we see Bitcoin touch. I don't know where it wants to go, but then again, the good thing about this is it's more easier to identify that okay, we are no longer bearish. So we've been bearish for the past couple of months, right? But when the trend is about to change, we'll most likely see it. But two things that I want anyone seeing this video to leave the video with is that when the rates are cut, price might not exactly starts going up immediately. We might still experience, and again, it depends on other economic factors, and it also depends on how much cuts happens. So let's say if rates cuts from like 5.5 that is currently is at now to like maybe 5.25, the markets might, I don't know how the market might want to respond to that, right? But there are a lot of factors to consider essentially, right? There are a lot of factors to consider. So this is my 2 cents on how I think the anticipated rate cut would affect Bitcoin. I mean, I don't want to look at altcoins because they've been really underperforming in quotes in recent times. In recent times, on the short term, I'm actually looking forward to how price reacts at this low of 49K. There are chances that price might fail to take it and then will now start rebounding for higher highs, or price will come to take it in the future. So yeah, I think that is all for now. Again, it's been, I think last time I did a video like this was in like 2022 or so. It's been a while since I shared my thoughts on stuff like this, and it was because of I was having a chat with a friend. I was like, in fact, I'm making this video because of him. I'm just going to send him the link to it because I really couldn't explain with like picture charts. I just have to show you what I'm saying as I'm saying it and explaining. So that'll be all for now.